I'm the Chief Product Officer at Zoniqx. Uh, by saying this, I'm going to kick it off, and I will let you, introduce yourself and Enzo Finance.
Perfect. Well, thanks for having me, guys, and it's a pleasure to be here. I'm Luca. I'm leading business development for Enzyme for about 5 years, so I've been with the team for a long time. One of the core members, and our history is actually as long as yours. We started building on-chain asset management tooling and infrastructure in 2017, and we've gone through multiple market cycles, multiple cycles and versions of our infrastructure. And obviously, we have a strong footing in as crypto native, as decentralized finance. But more lately, in the last let's say couple of years, we've seen the evolution of tokenized finance and real world assets, and definitely this has become a much stronger focus, as a niche for the present, but also for the very much so for the foreseeable future. So excited to be here, excited to talk about some of the real cases and give you some of the grapevine discussions, maybe without revealing names, but definitely, I'm here also to share some insights from the industry because we have a lot of them.
Definitely, it's an exciting space to be in because a lot of the jurisdictions and regulations are starting to adopt real world assets and making it as close to as a traditional finance asset. And eventually it's going to be the same whether it's a traditional finance or a real world asset. It's going to be the same process, and the flow would be the same. So it's a very exciting space. And by saying this, let's see. Let me jump right in to see, with Enzyme, it has been, like you mentioned, it has been a pioneer for on-chain, asset management. So could you, talk to us about how Enzyme is enabling institutions to manage, portfolios and, programmatically on-chain today?
Yeah, of course. I think discussions with institutions have been going on for a few years now. You said like that the processes will be actually carried over to on-chain. I think like they actually will be a lot better because when we talk to financial institutions, we uncover some of the existing practices, which is it's still using spreadsheets and PDFs and manual monitoring, and so there's a lot of inefficiency still. There's a lot of manual work that goes into managing funds in the traditional way. And so, of course, the first thing that catches the attention of traditional finance players is the gain of efficiencies and the transparency, or maybe selective transparency, because we can talk later about like privacy and how this can play a role in the future. But let's not get ahead of ourselves. I mean, the gain of efficiency is one of the most important things, and then having portfolios that can be managed on chain also unlock definitely other things like automation and the ability to create portfolio that rebalance themselves, or have like capital deployment that happens automatically, having cap tables that basically are reported very easily, looking at on-chain data. So all of those things, also fund administration becomes very easy. So I say, like, to sum up in one line, like we turn paperwork into like programmatic, realities and on chain that become like a lot easier to manage and to scale globally to different jurisdictions, different investors. So this is I think like this is the year where like the proof of concept start to become less experimentation and more like competitive advantage, I would say, for institutions. So it's really becoming something that they have to compete and use as a really like a strategy moving forward.
Definitely. I mean, with a lot of paperwork, because obviously these, when you're talking about securities, they require a lot of documentation, and the more the paperwork, the more the time to go to market. And when it becomes digital, then, it decreases the amount of time for someone to go to market. So I 100% agree with you, Luca. And the adoption is, happening as we speak. So that is increasing every day. Now, there are many protocols that try to offer, modular asset management. But the enzyme architecture stands out. So could you talk to us about what makes enzymes infrastructure unique, and how RWA companies like Zoniqx and DeFi builders can take away from it?
Yeah, for sure. I mean, like I think like we have a lot of experience building like vaults and on-chain asset management infrastructure in general. So we've been in this space long enough to know that it's a complex task, and it's not that simple to build modular infrastructure. I mean, we historically have been trying to build very trustless type of vaults that obviously the more trustlessness you include, the more rigid they are, the more constraints you have to bake in. So as we evolve in the industry, and like with more requirements, for example, people want to go and can use multiple chains. They want to connect with different protocols and smart contracts to be able to do things quickly. Or they also want to include more and more assets, and having like reliable price sources for those assets is also a challenge. So one thing is build modular infrastructure. The other thing is actually like put together those modules in a way that makes sense, that they actually have a coherent and consistent, let's say, links between all the pieces of the Lego. So this is actually been one of the biggest challenge, and I think like we've been able to put together a strong piece of infrastructure that that it is able to tokenize more like that, creating like the initial layer for share issuance, deposit, processing deposit redemption, calculating fees, NAV updates, and all those things, but also putting it together with the execution layer, where you can actually then plug in different things and different connecting with tokenization platform like Zoniqx, where you can actually get all these primitives or underlying real world assets, and then closing the loop with the reporting or valuation layer, where you can actually get reliable pricing data and then pushing that on chain again, because you want to have reliable NAV data, so that you can display this to investors, but also you can process like deposit redemption seamlessly. So all those things coming together, I think it's very nice to see. And we like in relationship with platforms like Zoniqx, we see ourselves as more like the portfolio management tool on top of an existing primitive. So I think like, just to sum it up in one sentence, to your questions, like some protocols offer like just like single Lego bricks, and we try to bring the whole workshop, because we want to have like something that it can be just used as a sort of complete solution.
Understood. So, because of the experience you guys have in this space, you built the entire ecosystem from the start to end. That makes a lot of sense. And, I 100% agree, because when you tokenize a RWA asset, majority of the institutional buy sides, or the investors, one of the things that they will want to see is the net asset value, the NAV of the underlying asset that is being tokenized, and how it's performing. And that metric is a key to build trust for investors, who could then come on chain and make that investment. So I concur with you there. And so, now moving, let's move on to, the onboarding. And let's say, we have a institutional onboarding and compliance. There are bottlenecks for, on-chain asset management. So could you briefly talk to us about those, and tell us how does, Enzyme streamline these processes without compromising or decentralization or user control, or for any of the data?
Yeah, I would say like one of the let's say maybe misconceptions or misassumptions when it comes to on-chain asset management is that it's like everything is permissionless. I think like that this is still true for certain product designs, and I think like having a type of product that is a DeFi native and has like permissionless access is always going to be part of our DNA. But definitely, like the space is evolving, and we're starting to see also more and more permission type of setups, because I mean, at the end of the day, this technology can be adapted to different use cases and different type of different type of architectural designs. So when it comes to institutional adoptions and product architecture. You can design something that is completely permissioned, that has KYC or KYB modules, that have whitelisting of investors. So like only certain addresses or certain identities are authorized to interact with certain smart contracts. So that's one thing that allows for compliance. And then also like when it comes to the execution of the strategies within the vault, then you can actually apply certain rules or certain criteria. For example, interaction only with certain whitelisted smart contract or counterparties for that matter, because the interaction on chain does not mean that you have to go to and play with anonymous counterparties all the time. In fact, like in the past, we've been building vaults with banks in Switzerland, for example, that wanted to comply with travel rule requirements or AML policies, and therefore like they actually they requested us to build this kind of thing. So again, I think like compliance shouldn't mean just like centralization, or actually compliance should just mean that there is a set of rules that are set in code and that are applied transparently, and that so like we shouldn't like just replicate some of the opaque processes that are in TradFi. We just basically apply the same rule, but with our principle, maintaining our principle, I would say.
100% agree, because from talking from the RWA space, for compliance is quite important, because these RWAs are securities, and for every transfer or transaction that occurs on an RWA, it's mandated that they have to meet the regulations and the jurisdictional rules, and every jurisdiction has a different rule set. So depending on the issuance, for that transaction, it would require that it meets that rule. And with 7518 protocol that Zoniqx currently has, that kind of enables the compliance rule sets to manage. But with having Enzo Finance, in the ecosystem to, enforce that with custom rules like, multi-party signatures or custom nets with institutions that they require, that is a key as well for adoption. Now, quickly, since you guys have been in this space, from your perspective, what is the asset class you think, is the fastest growing on chain, and what do you think is driving that trend?
Well, I mean, the fastest growing asset class is certainly stablecoins. I mean, that's number one. I mean, I think it's under like it, definitely like it's for everybody to see. Because like that's the first building block that you need as a cash leg to actually then access the other product that are coming on chain. So that's the number one, and we've seen like the legislation coming very clearly in the US, which has certainly set a trend, which is here to stay and to grow very, very fast. So now after we have like a cash element in on chain, which is regulated and widely adopted, we can then move on and say, okay, we have examples of money market funds, and then you have like a whole like a plethora of assets that are coming on chain. After that is like private credit funds, and then we'll have like other asset classes, real estate, and we now have like tokenized AI, data centers. We have a bunch of new asset classes which are very exciting, which are not easy to, when you talk about money market funds, they're also obviously very accessible also off chain or like in traditional ways. But if we talk about more like exotic asset classes, which are very, very attractive or compelling for investors, then they're not so easily accessible otherwise. So having them on chain represent like a first time or first opportunity, the first look at something that is very compelling as an investment. So I think like those asset classes are the ones that will get the most adoptions, especially like as it comes to fixed income. I would say that's like the biggest biggest sort of like asset classes in the world in general, and those will get more and more adoption in on chain in general, and then we'll see like we'll see you're starting to see examples of equities, and I'm sure like that the 2026 is set to like really I think skyrocketed the adoption of many asset classes.
It did. It definitely did. So, historically, Enzyme has been focusing on, decentralized asset management. So, what was the inspiration to expand into partnerships with, RWA players like Zoniqx or the broader RWA space?
Yeah, I think like for us, like we like to stay in our lane, I would say, because like we know that the activity that you guys are doing, like the primary tokenization of off-chain elements, off-chain assets is complex, has a lot of elements. On-ramps. I mean, you know better than me, of course, but like let's say on-ramps, like connectivity with custody solution, with broker dealers, all those things that hard things to like simplify. Like simplicity that you bring is definitely very complex to achieve. But what we see ourselves as a sort of additional layer on top of what you guys are doing. Like you guys bring the ingredients, we bring the kitchen, maybe the chef, because what we want is at the end of the day, easy way to create portfolios with multiple real world assets, with multiple, it's like on-chain ETFs where you have a combination of different primitive products that are brought together into a more coherent portfolio. Because the adoption of single asset maybe not so easy, but the adoption of, I mean, what really spurred in traditional finance, the adoption of financial product was actually like indices and, mutual funds and all those things that actually are something that like a financial advisor could actually recommend to their clients. So I think like the same principle apply here, and we will see more and more of these things coming on chain through the combination of our full stack solution.
Understood. Yep. So, there is a common misconception, around automation and trustless on-chain assets, right? Or in on-chain asset management. So, what do you see when talk to the community? What are the most common misunderstandings that you encounter from institutions entering decentralized finance?
Yeah, I think I mentioned one earlier, like that like things that are on chain are somehow like permissionless by default. I think that's a common misconception, and I think like also that also another misconception I think is that that regulators see on chain as just like not the right way to do things. I think like that's like, I think it's becoming quite quickly the opposite. Like they start to see that, they start to actually appreciate the transparency that you see, and the certain rules that are less opaque. I think like basically like what we're doing here, we're just like upgrading the operating system, and we're creating a more honest operating system, if anything, one that can be also scrutinized or monitored, quickly and much more easily by regulators. I think like okay, this is a bit like a digression from this specific question, but I think like the importance of privacy, like this is like one of the hottest topic at the moment, for a good reason, because I think like the adoption of real world asset and institutional capital has to go through also some privacy solution, and in there we have like solutions that can actually cover the amount, cover the transaction sender, receiver. So there's different elements of privacy or confidentiality that can be included. And also the idea, what I think to be the most fascinating idea is the idea of selective transparency or selective privacy, meaning that those things can be actually obfuscated to the wider public, but they can actually be uncovered to a regulator, to somebody that actually demands access to this data. So I think like these things don't have to be. I think like in the future, like the fact that we'll have access to every wallet on chain, we'll be able to see what their holdings are all the time. I think it'll be a thing of the past.
Yeah.
But we will still be able to, some parties that are authorized or mandated will still have access to this information. So I think like combining those things will definitely break all the misconceptions and misassumptions, because this technology is so radically better that it will be just like the standard de facto.
Yeah, I agree. And, especially large institutions, when they want to invest, one of the things is market manipulation. When it becomes public that, there is a large scope for market manipulation when you see large institutions invest into a particular asset, right? So privacy is definitely something that's here to stay, and, we'll just be building on privacy for securities, and not just securities, but in any exchange. of assets. Now, as tokenized, as jurisdictions across the globe have started uh, regulating digital assets and securities, as tokenization as a whole accelerates. You briefly touched about how enzyme facilitates this and provides a conducive ecosystem. Could you talk a little more about specific roles that enzyme will play in enabling asset managers, fund managers to handle, uh, let's say, tokenized real world assets in a compliant and scalable way?
And yeah, I think like we've touched upon these items, but like let's maybe like recap a bit. Like an asset manager, using Enzyme and using a combination between Enzyme and Zoniqx can easily create can easily create, launch, and scale globally a portfolio of tokenized securities, having using on-chain infrastructure that has also some permissioning, like as I mentioned, can have like modules for KYB, KYC, and have rules around transferability of the shares, and and then like you can also have these are some of the compliance mechanisms that you can apply at the protocol level. But as you briefly touched upon earlier, you can also bake in some compliance rules around the tokens themselves through different standards. So a combination of those things make it possible to create to have a full stack infrastructure where you have like imagine a world where you can have a one-click like deployment of a full like on-chain product that can deploy capital, can accept capital easily, can deploy capital as easy, and can rebalance as well. I mean, we're talking to institutions that want to already start talking about AI powered portfolios or AI. So when I talked about the ingredient, the kitchen, and the chef, maybe the chef is actually AI in the future. So I think like also like with discussions with players that want to have AI used for fund administration, and not maybe as the portfolio manager, but the fund administrator who checks like the like an NAV updates, the accepts deposit and redemptions, and then checks the activity level for malicious or anonymous transactions, if anything. So all those things can easily be processed on chain, and AI will certainly play a role to optimize some of the processes.
100%. So, now that we're talking about how, we could make things compliant, working together. So let's go a little bit deeper about, Enzyme and Zoniqx collaboration. How do you envision, particularly in, simplifying portfolio creations, let's say compliance workflows, or institutional grade RWAs, strategies. We did touch briefly, through our through our conversations about this, but I would want you to talk a little more about give us a sneak peek in terms of how simple the process would be, and what that would look like for an institution.
Yeah, for sure. I think like these things will become quite easily once we have like a full stack integration. I think like this is something that has been exciting to talk about, and to be able to present a coherent solution that includes both the primary tokenization, have like so I think it's exciting for a manager to have access to a catalog of assets available for investment, and to have like an easy portfolio management tooling that allows to create any kind of product, any combination of products with any flavor, with any risk reward kind of profile for different type of investor. Also, let me dive into some discussions that, again, like these are some of the insights from the industry conversations. One of the things that people in traditional finance seem to be interested in is like creation of single like SMAs, or single managed accounts, because like some of the institutional players want to slowly get away from the sort of collective investment kind of models into more like individual portfolios, because this technology easily enables to have, for example, a model portfolio that is set by a portfolio manager and then is easily replicated over and over across multiple vaults or multiple private portfolios. So this creates reality where, like, thanks to the ease of deployment of smart contract and also the ease of using automation and maybe even AI, we can actually create these type of parallelized portfolios that represent private exposure for single investors, where investors in certain situations, they also keep custody of their own assets and they hold 100% of the assets held in a certain smart contract. So I think this is exciting to see because it creates like many possibilities for things that are not so easy to do in traditional finance, because in traditional finance they would generate a lot of overhead, a lot of additional costs, operational burden, whereas here they can actually create an easy scale without exploding costs. So I think these are some of the exciting things that the conversations are bringing about these days, and I'm very, very, very excited to be part of this conversation and to be also be talking to you guys about this journey that we can take together.
That's awesome. So my takeaway from what you said is with the ecosystem like Enzyme and Zoniqx collaborating, institutions can go to market faster, can onboard quicker, can also because of the technologies that's available now, can diversify and their portfolios and manage them in silos, which reducing the operational overhead costs as well. So there's cost reduction and productivity increase for an institution. Now this is only possible with the existing adoption and what's been happening with the regulation. So institutions don't really have to worry about compliance as well, because the same regulations and compliance is brought on chain, which is verified on a immutable ledger. So wow. So yeah, I mean, it's an exciting space to be in. It's been a pleasure speaking to you, Lucas, and gain your insights on the market and how market is shifting and adopting into this space, and how you're providing Enzyme Finance is providing the services required for not just large institutions, but even something like a family office or any of these to be able to get access to security assets, RWA assets, with with the required data that is backing those assets to build trust and adoption. So it's been great. So
thank you very much.
Closing, while I know we are a little over time, so to close this, in your closing, is there anything that you would want to close with?
Yeah, I think you said it yourself. Just to add, this, I think 2026 will be the year where we'll see amazing things happen. It's the year where the proof of concept become strong competitive advantage, and maybe is a year where institutional will start to feel a bit of FOMO if they actually don't take part of this. So I think this is gonna be fun to watch, and let's take the popcorn and follow the show.
Yeah, that sounds good. That sounds good. Thank you again, Luca. It's been a pleasure talking to you.
Yeah, thanks for having me. Bye-bye.